What's up, everyone? Welcome to the Daily Macro Update for Thursday, October 16th. My name is Johnny Zerdy. Welcome to the show here. And, taking a look at some of the markets here, heading into the close in about 10 minutes, we're having a little bit of a sell-off due to some concerns with a possible regional banking crisis, which I don't think that's going to happen, but we're having a little bit of a trend shift in regional bank stocks, as well as, trade tensions are rising with China. And so both of those two things are happening at the same time. And look, the market has been going crazy for the past 5 months. You got to know that, something somehow is going to get this thing off of the top end of the trading range in order for it to have a nice little reset, right? Structurally, for the long term, or I should say medium term, it doesn't necessarily look like anything is going to cause the market to go bearish at this point in time. That could change. But, a lot of these things you have to take a look at as buying opportunities so long as the market maintains its bullish trend, which it currently still has. But we'll get into some of the macro data today. We got some pretty good data on housing, as well as another index from I believe it's the New York Manufacturing Index, but we'll get into that momentarily here. But taking a look at the charts, looking at the regional banking ETF KRE, you can see that this has had a very large, drop today. And, this is essentially going from neutral to bearish trend. And so as we can take a look here, it went, surprisingly, the trading range model that we had the low end of the trading range zone between $57.85 and $59.10. So it's really just going right down to the low end of the trading range zone. But, with it doing that, it is breaking trend back to bearish trend. So this is definitely an interesting change. The regional banking ETF KRE has not been bearish since December of 2024. So yeah, definitely an interesting break in trend there. Going through some of the different key indicators that we like to look at. The dollar is having a little bit of a correction here, still maintaining its bullish trend, but we're seeing a little bit of a correction there. When looking at the yield curve is having a decent steepening today, only because the 2-year bond yield is dropping faster than the 10-year bond yield. And it looks like the 2-year is reaching a level that we have not seen since September of 2022. So this is fresh, new lows locally for the 2-year U.S. government bond yield. And it's dropping faster than the 10-year U.S. government bond yield, which typically is a steepening effect that's called a bull steepening, which typically happens when there's a little bit of a recession fear in the markets. That's essentially what the bond market is suggesting here. And so interesting to see that. I wouldn't be surprised if we get that continuing with inflation coming down, as well as you're still having a little bit of growth go sideways, but that is interesting. We'll see. Probably after today, we'll most likely see a spike up higher on credit spreads. So that is also a development to pay attention to that we have not seen in quite some time. Really the last big spike in credit spreads was all the way back in August, but it was very short-lived. This is a much larger magnitude to a higher point than in August. So credit spreads are definitely, signaling something here. And then also too, the volatility index of the S&P 500 is making is about to close at new highs, and the VIX is now in bullish trend. So when volatility is bullish and it is well below the 20s, this is where you really have to pay attention. And if any type of losers broke to bearish trend in your portfolio, our process tells us to just get rid of it, right? So, that's part of the reason why people join our community, is so that they know when to get rid of things, so that they're not bag holding losers. And so, part of that signal is the VIX entering where it's at right now. Nice little correction here on uranium that remains in bullish trend. Some of the things that we've been remaining bullish: silver miners, palladium. A lot of these things are actually up on today's down tape, and so yeah, precious metals. That is the big beast of 2025, along with Bitcoin miner stocks, which actually have been having a little bit of a correction today. Bitcoin miners, it's having a little bit of a correction, not quite yet towards the low end of the trading range. So, I mean, this is still maintaining its large bullish trend. I'd like for it to come down a little bit lower. But yeah, I mean, this thing has also been one of the best winners of 2025. But what just happened again in our model for the second time in the past 2 weeks is that Bitcoin is now bearish trend again. So I had one of our members actually reach out saying, like, wouldn't this be neutral? And the reason why it's not neutral is because our model is saying it's not neutral, but also, too, you have to take a look at the context in which, this trend break is happening. And it's on a higher volume, and volatility is continuing to spike. So you have to take a look at all those different factors. And yeah, Bitcoin going bearish here, that's not something that my team and I own. Anything that's bearish, my team and I are not owning. So who knows, though? Bitcoin could rebound from here again and reclaim its bullish trend. But, the thing is that with Bitcoin kind of going back and forth here, I don't want to be in it for when it does something like this, right? If it starts to come back down to, this zone over here, that's something where I just want to make sure that I'm not getting in the way of that. But at the same time, if it does end up reclaiming bullish trend, and then maybe it has another correction on lower volume, then this is where I'd want to buy before it does something like this, right? So I do not mind waiting for this setup to happen. If it does, great. If not, no problem as well. We'll just wait for it to reclaim its bullish trend while we own other things that are in a clear bullish trend. We've been saying over the past few days that altcoins, you don't want to own those. Those remain in bearish trend. And that has proven to be the case. AVAX looks terrible right now. And then just looking at the indexes abroad here, S&P 500, great time to get rid of some later or earlier today. And it's kind of just going sideways here. It still remains in bullish trend, though. We'll see what happens if it continues going lower. But yeah, I mean, for this to go even neutral, it would have to close a lot lower from where it's at, which could happen, but I wouldn't be surprised if it does go neutral. But it still remains in bullish trend for the time being. So there's that. The best performer, though, has been small caps. If I was to buy some type of index, which I'm not, but if I was to buy one, it would be the Russell 2000. And I would express that with the ETF IWM. And it's currently having a little bit of a correction there off of the top end of the trading range. It's not yet near the low end of the trading range, but if you still wanted to buy some, you could, since it's on red here. All right, let's see. Walmart having a nice little correction from the recent pop that we had. Let me get rid of the trading range model. JP Morgan is having a decent correction as well. Lots of these still remaining bullish trend. Berkshire is on the brink of going neutral. But yeah, I mean, it just looks like another buying opportunity in the markets here for anything that's in bullish trend. Financials, that if it closes, let's see, there's 2 minutes left in the market. If financials close here, then that will go bearish trend. So, I mean, looks like that's where it's going to close. So I'm going to change the financial sector to bearish. Let's go through some of these. Energy remains bearish. Discretionary looks like it's about to go bearish. Those are all ready. Yeah, interesting to see that there. The three best bullish trends remain with tech, healthcare, as well as utilities. So, yeah, let's go ahead and get into some of the macro data here today. All right. Home builder sentiment continues to rise as rate cut expectations also continue to rise. The Philadelphia Fed factory manufacturing activity did go down this month. So that was the first large deceleration for the first time since April of this year. New orders, remained positive. Prices paid had a little bit of an uptick. I think the main contributor was because of shipments fell, which is interesting. A lot of these manufacturers, because of the tariffs and the holidays coming up, a lot of them front ran a lot of their orders ahead of the holidays. And so, there was a huge boost in shipments in September because of, all these manufacturers getting ahead of these higher tariffs as well as the holiday season. So you could just be seeing a normalization from a lot of that front end demand accelerating from there. What else we got? New York Fed regional services data had a large deceleration back down to lows that really haven't been there since, let's see. Yeah, back in the beginning of 2021. So yeah, the services index doesn't look too hot there, and that's been decelerating since pretty much the entire calendar year. Yeah, and then housing market, NAHB home builder sentiment had a huge pop based off of rate cut expectations declining, or rate cut expectations rising rather. So that is what I'm seeing there. That's pretty much all I'm seeing in terms of the macro data here. Taking a look at the yield curve, like we mentioned before, with the 2-year falling faster than the 10-year, you'll continue to see a steepening effect, which is exactly what we're seeing right now, and that could be turned into a bad thing, just like how when the market was correcting on this bull steepening, that was mainly a concern of a recession fear. So not all yield curve steepenings are created equal, and you always have to look at the context in which the yield curve is steepening in order to understand what it's signaling. And so with something like today, this is more of a cautionary recessionary type of signal that we're seeing. Not saying that is calling for a recession. It's just one of those days where that's kind of what it's signaling in the near short term. But the market just closed up there, so interesting to see how things are closing. We'll go ahead and get into some of the comments here, starting with YouTube. Matthew Chow, appreciate the comment there. With Bitcoin going neutral to bearish trend, are Bitcoin miners still bullish in your model? Yeah, great question. So Bitcoin, even though it did go bearish in our model, we still have Bitcoin miners as bullish trend because that's just what the math is saying, right? If Bitcoin itself goes bearish, that doesn't necessarily mean that Bitcoin miners go bearish. Even though Bitcoin is the underlying asset, you have to remember that a lot of these Bitcoin miners, as well as a lot of the components that are in WGMI, aren't necessarily, completely Bitcoin miner stocks, right? So if we take a look at this ETF and look at the holdings, you can see, that holds like NVIDIA, Core Scientific. Some of these are just like AI-driven types of companies as well. Yeah, so Taiwan, TSM, right? So not that those are large allocations, but even something like IREN, as well as Applied Digital, like those aren't just like having to do with Bitcoin miners, right? There's also an AI play associated with the Bitcoin miner ETF, and so yeah, I mean, this isn't necessarily a reflection of Bitcoin's price, right? It's two separate things entirely. You do have great bullishness when, it is nice when Bitcoin is also bullish. That's typically a good backdrop for Bitcoin miner ETF, for the Bitcoin miner ETF WGMI, but it's not necessarily something that is required in order for it to, be making, new highs type of thing. Good question there. Jeremy Klein, appreciate the question. What's your take on copper and what is the best ETF/ticker? Seems it's one of the few metals that's not bullish. What healthcare ETFs do you use? XLV. So there's a couple questions in that. Yeah, so the copper ETF that my team and I prefer to use is CPER, and it is actually in bullish trend. So it's actually not one of the few metals that's in bearish trend. It is bullish. So yeah, copper is in bullish trends. We use CPER. And then if you want copper miners, we use COPX, which, that's similar looking to Bitcoin miners as well as silver and gold miners too. But those are the two things there. All right, let's see. SPX versus gold. Jimmy asks, the SPX/gold recession you mentioned, this could be a signal for the next 10 years. Can you explain further? Sure. Yeah, we can definitely get into that. What I meant is that in real terms, right? Because you have nominal versus real. Nominal is just what the number is. Real is that number adjusted for inflation. And so, with gold being an inflation hedge and something that is, it's just a precious metal. It's not something that it's a company that is providing, revenue, bank statements, things like that. It's just a metal. And so with it being considered a currency as well, it's a pretty decent inflation hedge. And it's something as well that it's one of the few assets that global central banks actually keep on their balance sheets, other than, dollars and other fiat currencies. And so, that's a huge thing. And so what you can do is you can use gold as a proxy for real values of things, right? And so, if you just take a look at the S&P 500 and then you denominate that in gold, it gives you a pretty good understanding of where the market is in real terms. And, as we mentioned in the video before, the S&P 500 denominated in real terms, or you can just look at this as the stock market inflation adjusted. And that's been in a huge bearish trend, pretty much since, I don't know, August or July of 2024. And really since the beginning of 2025, this has taken a huge drop. Had a little bit of a bounce here from the April lows to about mid-August. And then ever since then, it's had a drop right back to the April lows. The last time it's been this bad as well was, take a look at that date right there, March of 2020, the pandemic crisis. That was the last time that it was at this low. So, yeah, I mean, this is a big signal, ladies and gentlemen. This is showing that there is no real value being created in the stock market. It's simply a factor of the central powers working together, meaning both the government as well as central banks, devaluing our fiat dollars. And so, even with all this AI hype and capital expenditure going into, investing into, artificial intelligence, as well as, the structural investment that's needed for AI to exist, like electrical grids, construction, fiber optics, all those different things. Even with all of that, we can see that there's not really, there's not any real value being created in the markets right now. And so, that's why I was calling it the silent recession, is because adjusted for inflation, our money is being stolen from us. Not only is it getting taxed into oblivion, right? Because in some parts of the country, it's even worse. But for where I live in Florida, even though we don't have any state or local taxes, all we have is federal taxes. We still have to pay taxes on properties. Insurance is insane. Sales tax is insane. So after you get taxed at the 30% rate, right, then you're also getting taxed when you pay for something. You're getting taxed when you earn money. All those different things add up, right? And that's why, like, when people say, oh, the tax rate, it's only, 22% on average. And then if you earn a lot of money, you're getting taxed 30%, but what you're not understanding is the silent tax that's going on here. And so really, when it all comes down to it, if you're accounting for the actual taxes as well as the silent tax here, essentially all your money is being stolen. That's why it feels so difficult to, keep up with the cost of living, the cost of groceries, the cost of everything else. And it seems like things are going up. It's because of the out of control central powers that are inflating our dollars away, right? So they're flooding the market with a supply of dollars and credit, and that's really what the story is, right? And yeah, so I mean, when you look at the market in real terms, it's clear that we're in a recession right now. Hopefully that answers your question there, Jimmy. I know I kind of went on a rant, but yeah, that's what I think about that. Let's see. Let's go over to Instagram. What's pulling back the market at the moment? I already answered that. Is this week a wait and see to watch how the SPY ends? No, not necessarily. There's plenty of other bullish trends that are providing opportunities. So no, not necessarily. If you're someone who only trades the S&P 500, I don't know why you would do that, because there's way better things to own than the SPY. But if you're limited to that scope and haven't broadened your horizon with better things, then currently it's not at the low end of the trading range. So I personally would not be buying it here, but yeah, it's kind of just in the middle of the range there. I don't like how it did put in a lower high right here. And if we take a look at volume, we did have a large acceleration, a large volume acceleration on this red day today. So yeah, I don't necessarily like how volume is accelerating on prices declining. And when taking a look at the volatility ratio flow zones, this is well above 1.0 on that ratio. And that is typically not a great environment for flows. So yeah, not looking too hot there. Even though, it still remains in bullish trend, I'm seeing a lot of bearish divergences. What do you think about Bitcoin? It's bearish. All right, let's go over to some of the questions here on TikTok, and then we'll go ahead and wrap it up. Just scrolling here. I have to like squint because the text is so small. Aset, how's it going, man? Glad to have you on the live here. Why are index is falling today? How did you read that? We already answered that. I called the top on the markets here last week. I'm glad you made some money. That's great. I don't know if it's the top yet because the S&P is still in bullish trend. So I think it's a little bit early to call a top. Could be. Who knows? We'll see. Who cares? Calling tops and bottoms is just a gamble. Regional banking crisis. I don't know if that's actually happening. All I see is that regional banks are going bearish trend for the first time in nearly a year. So that is definitely a signal to pay attention to. But yeah, pretty large deceleration there. Can you show us the trading ranges for SPY? I already did, but I can show you again here. Yeah, so they do have to reset for tomorrow, but top end of the trading range, 672.79. Low end of the trading range is between 652 and 650. And by the way, you get the updated ranges for the SPY Qs, as well as for the Russell 2000 IWM every single morning, emailed to you at 8:30 a.m., a whole hour before the market opens, based off of our model here. And all you have to do is just go to macro-optics.com. And right here, it says just to put in your name and email, and then you'll get access to the daily index ranges, which is our free newsletter, which is where we send you those ranges every single morning. So get those in the morning, and you don't have to wait until the market close when I do these live streams to get it. And yeah, I I always leave a little bit of a comment too on kind of like the market moves that I'm making in that too. What indicator do you use to determine bearish trends? It's not one indicator; it's multiple indicators. So yeah, it's our own indicator that we've created, and it's multi-factor. So it takes into consideration a bunch of different other things. So there's not just one thing. Great questions, though. All right, so it is about 4:15 here. We'll go ahead and end it there. I appreciate everyone for joining. We're still going through, and my calendar is almost booked up for the entire month. There's still a few spots left. But if you'd like more clarity on when to execute, as well as having full access to our partnership circle for free, can't believe I'm even doing this. But right now we're doing a 6-week challenge where you get full access to our highest tiered community, which is our partnership circle. So you get our entire modules for training. You get all of our access to our meetings, including the Macro Madness one, which is only offline for our partners. You essentially get access to everything with the 6-week challenge. And yeah, if you feel like it's time to actually learn how to apply macro to your current investing process, and you want to see exactly how my team and I are positioned right now, then just book a strategy session with myself. If you don't see it there, if they're all booked up, just let me know and I'll try and open up a selection for you. But we'll see if it's something that you want to take on. And yeah, so let me know by going to, you can get the link to this by going to there's on YouTube. There should be a link below in the description. For people who are on Instagram, it should be the link in my bio. And then same thing for the people who are on TikTok here. If you just go to my bio link, there should be a link there for you guys to click there. So yeah, join the challenge, get access to our full what we have to offer here, and yeah, we'll see you in there. But I appreciate everyone for joining. We don't have a live stream tomorrow since it's Friday, but we will be back here on Sunday for the Sunday Macro Wrap Up. And yeah, I hope you guys have a great rest of your weekend, and we'll see you then. Bye.